Crypto Kids, we have some shocking, breaking news. About an hour ago, we got the announcement of the CPI data. It came in at 2.7% year on year. The expectation was 3.1%. It would have been higher than the September data of 3%. October is skipped because of the government shutdown, but we fell down 40 basis points below expectations and got an inflation of 2.7. Core inflation is also down to 2.6%. This to me is shocking because of what the Fed will likely do following this new data release. Make sure to watch until the end of this video for not only the inflation, but also the Bitcoin price analysis and what will happen in a couple of hours' time as a new important economic event. With that said, if you can destroy the like button for me, that would mean the world. For daily price analysis, go and subscribe to become a crypto kid and turn on your notification bell for immediate and urgent updates. Let's jump into the inflation and talk about Bitcoin. So the expected inflation was 3.1. We got 2.7%. The primary reason for the Fed not wanting to cut rates aggressively, they want to go the staircase way or probably even hold the current interest rates at about where they are for the upcoming few years. Yes, few years. When you go to the Fed dot plot, you can see they want to keep rates at about 3% into 2028 and beyond. But we also know that there's about $9.2 trillion of debts they need to refinance next year. They need to refinance it. If they refinance it at the rates we are currently, closer to 4%, America is going to end up paying tens of billions in interest. So the Trump administration wants them to lower it as much as possible. The upcoming Fed chair, potential Fed chair, says they should cut rates right now, and that's to pay less in interest. But the Fed, they don't really look at debt refinancing. They look at unemployment rate and they look at the inflation rates. The unemployment rate was jumping. There is risk for unemployment more so than there is risk for inflation. But inflation was steering away from 2%. Unemployment was getting a little bit out of control, so they were cutting by 25 basis points. They were scared that if they cut more than 25 basis points, then inflation will go even more bananas, and they may not be able to maintain it down the line. So they were going a little bit conservative, 25 basis points at a time so far. Here we can see that inflation is coming down even after 25 basis point rate cuts. So I think we're going to see an update on the Fed watch where the probabilities of us seeing a further rate cuts will increase as to keeping stagnant with the rates. I think it's great news. If we can see more cuts, then we can see more and more liquidity potentially trickle down into Bitcoin going into Q4 of 2026. The more liquidity we have, the higher the risk on markets will go. About a half a year afterwards from those cuts and those liquidity events. Before we end off, we have two things. We have obviously Bitcoin to go into, and I have a comment from Elon Musk which I want to observe and question a little bit. With Bitcoin, the daily is the same. We still have that bear flag. We're still below the support line of the bear flag. We're below it. I'm in a little bit of a short position, a short hedge position. I think if we remain below 90s and specifically 91.8, because that will highlight the downtrend resistance, the downward sloping resistance. If we remain below 91.8, $90,000, then Bitcoin will most likely come down and grab liquidity below the 74.4, which was the April 2025 lows. If we're able to break to the upside, then I think we will come to the 200 daily moving average, the 50-week simple, get a test between 102, 108, and then see a rejection. But the scenario is the same. I think ultimately we will get back to this level. It's whether if we will go down to the below 74 area or into the 74 area, then go up, or will Bitcoin break above this downward sloping resistance and go up first and then come down. It's leading into the same place. It's just, will we see the break into 91.8 right now as of next week, potentially with the Santa Claus rally that we experienced, or will we break into the 74.4s, grab liquidity, and then head towards the upside? To balance things out, I'm mostly long. I do have a little bit of a short hedge position. I'm accumulating Bitcoin every single day, and once we get up to that moving average, that's when my positionings will change drastically as I flip from majority long into most likely majority shorts. Finally, Elon Musk posted yesterday that it is certainly a nice gesture of the DAOs for contributing to the Trump accounts, another inflationary thing, but there will be no poverty in the future, and so no need to save money, he says. There will be universal high income. How will there be universal high income? I get that AI will create abundance of wealth, but the way that the financial system is structured, it doesn't make it so that everybody has a universal high income. It's just not the way things work. Maybe I'm wrong, and maybe that is the way that we go into. It's possible, all right? It is possible, but I don't think not saving money is a good thing to do. For me, I'm saving in Bitcoin. I want to hedge myself against inflation for as long as I can. And I personally know that with my Bitcoin over the next 20 years, adjusted for inflation, bearing in mind that things go in the way that they are going so right now, I'll probably do fine, and I can be much more financially stable and confident than what compared to other people that won't be saving in a commodity that hedges them against inflation, against a currency that devalues by the second. So that's my stance on it. Let me know in the comments what you guys think about Elon Musk, what Elon Musk said. And I'll see you guys in the video tomorrow where we cover the Japanese interest rates. So everyone, take care. Thank you so much for watching. And as always, bye-bye.